Okay, so what exactly is a candlestick? So a candlestick is shown by its opening, the high, the low, and the close, which basically leaves us with a visual illustration like what you're seeing right here on our screen. So this is how a candlesticks will look like, right? So they have the what we call the opening and the close. So if a candlestick closes above its opening, that means it's a bullish candle. The real body, as you can see in the basic color code, it'll be white, demonstrating that it's actually a bullish candle. So it opened here, but then it closed above its opening. And then if it's a bearish, it'll open it'll open out above and then close at the bottom, so it'll close below where it opened, so that makes it a bearish. And in the basic color coding, it basically should be black, but you can play around with this, so it's not like a rule or anything. But anyways, what I also want you to notice is that during this candlestick right here, so let's say this candlestick is actually on a 1 hour time frame, so it's on a 1 hour time frame. So remember, we demonstrated a bit on time frames earlier in the other lesson. So what this means is that for this candlestick right here, for it to open and close, it will take 1 hour. But what happens in that 1 hour? For example, with this candle right here, we can see that during this 1 hour, the candle opened right here. It opened right there, but then during the same hour, it reached this point. It made its low. So this is the lowest point that this market, the price was pushed during that 1 hour. But then it also went as high as this. So this is the highest point where the market pushed, right? But then at the same time, before that 1 hour ended, for this candle to close, it came back to this point right here and then ended up closing right here. So for that last a few seconds of that of that 1 hour, on this 1 hour time frame, it basically, the price decided to come back and close right here, leaving us with what we call shadows. So we have the upper shadow and then we have the lower shadow. So the shadow is basically what is a shadow is basically this point right here, this thin line that you're seeing at the bottom right here. So that is our shadow, and then this one also at the top. So those are our shadows. That is what we mean when we're talking about shadows. If the close is above the open, the candlestick is bullish, which means the market is rising in this period of time. And bullish candlesticks are always displayed as white candles, unless if you change it around. As I said, depending on your depending on the colors that you have set your candles to be, the basic color code for bullish candle is white. If the close is below the open, so if the close right here is below the open, that means this candlestick is actually bearish, and in the case that the market is falling in this session. So the market is falling. It started right here, so when it opened, the price was as high as this, but then it ended up closing lower than that. So these bearish candlesticks are always displayed as black candlesticks. But then again, this is not a rule, even though most trading platforms use white to refer to bullish candlesticks and black for bearish candlesticks. The color doesn't matter, because you can use whatever color you want for both the candlesticks to demonstrate, just to separate the bullish and the bearish candlesticks, right? And then the most important is the open and the open price and the close price, because those two actually determine whether the candlestick that you're seeing is a bearish or is a bullish. So those are the most two important things, so the open price and the close price. The filled part of the candlesticks is called the real body. So this is our real body right here that you're seeing. So the black part and the white part in this instance is our real body, and then the thin lines poking above and below the body are called shadows. So as I demonstrated, these are our shadows that we have. We have the upper shadow and the lower shadow. So those thin lines show our shadows. So the top of the shadow right here is the higher. So it's the highest point that the market has reached right here. That is our higher, and then the lower part of the shadow is the lower. So it's exactly the same. Whether it's a bullish or bearish candlesticks, the high will always be the high, and the low will always be the low. So the high will always be the high, the low will always be the low. So that does not change. But anyways, what we want to focus on now is the candlesticks sizes. So the body sizes. So this ones, as you can see, they have big bodies, and then we have short bodies right here. So long bodies refer to strong buying or selling pressure. So this is a bullish candle, is buying pressure, selling pressure on the bearish candle. If there is a candlestick which the close is above the open with a long body, this indicates that buyers are stronger and they are taking control of the market during this period of time. So remember, candlesticks are found on different time frames. So on this time frame, if this is what you're seeing, if it is a bullish candlestick and it's like this, that means the buyers have taken over the market during that time frame. So it can be on a 1 minute time frame, 1 hour, daily, weekly. It just means, okay, during that time frame, during that week, during that day, during that minute, basically the buyers are in control of the market, right? And then on the opposite side, if there is a bearish candlestick which the open is above, the open right here is above the closing price, with a long body like this, that means the selling pressure controls the market during this chosen time frame. So short and small bodies indicate a little buying or selling activity. So the momentum will be less compared to what you're seeing right here. So that's basically the difference between the long and short bodies of the candlesticks. That just shows us the momentum and the strength that the buyers or the sellers have on the market during that time frame. So let's move on to our next lesson. Okay, so in this part of this lesson, we're going to be explaining a bit more on candlestick shadows. So they're also known as the tails. So the upper and the lower shadow give us an important information about the trading session, right? So the upper shadows signify the session's high. So this is the upper shadows. And then, as we said, it actually shows you the highest point where the market reached, right? Where it closes, where the shadows ends is where the market has reached the highest point, and then the lower shadow signify the lowest part. So this is the lowest part where the market has reached before the candle actually closed. So okay, so right now we're focusing on the long shadows of these candles, and it can actually be either on both sides of this. But right now, as you can see, we have a bearish candle right here, and we have the upper shadow as the longer shadow, and here on a bullish candlestick, we have the longer shadow at the bottom. So as you can see, we still have our upper shadows, but they're just a bit short. So right now we're focusing on our long shadows. So those are our long shadows over there. The candlesticks with longer shadows show that the trading action, so the price has been pushed way past the open and the close of these candlesticks. So that's why we have such long shadows right there. But basically the Japanese candlesticks with short shadows indicate that most of the trading action was confined near the open and the close. So it was near the opening and the close, as you can see right here. We have they're very close to the close of this candlesticks, very close to the open of this candlestick. So that just means the action was around that price, right, where the market opened and where the market closed. But anyways, in that trading session, remember these candlesticks are either on any of the time frames. So it just means in that specific time frame at that specific time. So if we have the long upper shadow like what we have here, that means the buyers came here and bid some high prices. So the bidding price went really high, but then at the same time sellers came in the market at the end of this session, and they basically pushed it down, and the market ended up closing way below than the highest bid that the buyers had bid. But then on the other side, if the long shadow is at the bottom, right, like this, that means the sellers basically forced the price to come down all the way down to this lower part right here. But then at the same time, the buyers came in again and they pushed the price way above where it actually the lowest point that the sellers had pushed the market to. So and then it ended up closing way above where the lower point is, and that's basically what is happening. So here that means the buyers are bidding higher prices, but then the sellers come into action and then they push it down, and then they just to have control over the price and push it down to this lower levels. And then on the buying candlesticks right here, it means that the sellers had forced the price all the way down here, but then the buyers, they came into action and they pushed it all the way up here, and then it closed over there. So that now the buyers are in control, and then here the sellers are gaining control bit by bit. But remember what we said, when the candlesticks, the real body is shorter, that means the momentum is not as much as compared to a long candlesticks that have long bodies. Moving on to why candlesticks are actually important. Candlesticks are important to your trading analysis because it is considered as a visual representation of what is going on in the market. So what is the behavior of the price and everything. So by looking at the candlesticks, we can get valuable information about the open, the high, the low, and the close of the price, which will give us an idea about the price movement. So candlesticks are flexible. They can be used alone or in combination with technical analysis tools such as the moving averages, which is an indicator, one of the most used indicators. So I personally use candlesticks with support and resistance, trend lines, and other technical tools that you will discover in the rest of this lesson. So candlestick analysis help us understand psychological factors by showing us how buyers and sellers interact with each other. Candlesticks provide more valuable information than line charts or bar charts. So they are used by most professional traders, banks, hedge funds. These guys trade millions of dollars every day, so they're basically the really powerful part of a trading session. They can move the market whenever they want. They take your money easily if you don't understand the game. these guys are so big that even if you can trade a $500,000 account, you can't really move the market or control what is going on. So using candlestick patterns will help you understand big moves and will show you when to enter or when to exit the market. So as I said, we're going to go into detail on selective amount of candlesticks that we're going to be demonstrating, which are key for you to understand this whole strategy and to win in this market. So candlestick patterns are one of the most powerful trading concepts. They are easy to identify and very profitable. So candlestick patterns have a high predictive value. It can produce positive results and profitable setups. So the system works, but be prepared for some losses. Forex is risky, so there will be wins and losses. If you're looking for 100% winning system, I highly recommend that you stop trading. Even the biggest traders still lose money. They still have some losing trades here and there, but your aim should be to have a risk reward of at least 3:1. So meaning that every time you win 3 trades, you at least have 1 loss, right? You have a maximum of 1 loss for every 3 winning trades. But anyways, if you understand how to read candlestick patterns the right way, you will be able to understand what these patterns tell you about the market dynamics and the trader's behavior. So we're going to jump into our first candlestick pattern, which is going to be the bearish engulfing bar.